You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. So, the OCR topic, let's talk about that. Hello, Kunch.
Good morning.
Nice and fast and quick.
Yes.
Okay, the last OCR review for the year.
It's tomorrow.
It's tomorrow.
Yes.
Probably by the time people listen to this, it's going to be
already done and dusted.
done
but,
and dusted.
you know.
What are the predictions?
Another cut.
0.25?
Yeah. No, a 0.25. Not
Okay.
a big one.
Not a big one.
The last one of the year as well. So that will give us a good indication because there's a big gap until the next one.
Interesting. Do you think the banks will drop the rates?
I think they've priced it in.
You know what I was thinking? You know how we did the whole episode on cashback and how the banks are offering all this extra incentive? I think they did this instead of dropping the rates
Yeah, true.
to lock people in.
Yes, true.
I don't know.
True
That was my gut feeling that why they're playing this game.
Yeah.
And I think because they're like, cool, refinance now, lock the rates, blah, blah, blah. Because it was a really interesting article I read and the guy was wrong. I'm sorry to say. But it was...
Can't always be right.
No, but he was like, oh, you know, the banks are offering all this cash back and it's amazing, but it will come with higher rates. And I was wondering what he meant by that because the clients are still being offered special rates, right? 4.4, 4.9, whatever it is. And I was like, why does he mean they're being stung by higher rates? And then I wondered if he was meaning subconsciously somewhere far, far away in his brain, that because the banks are offering higher cashback incentive, they're not moving on the rates as such. Yeah. And therefore clients are still
counteracting that margin, right?
Yeah.
Of them dropping. Because normally they drop like a week in advance.
Exactly.
And they haven't moved.
No, we have not seen the drop.
Yeah.
And I wonder if it will happen this year. Do you think we will see another drop?
We may see a wee bit. Like obviously the variable rate will drop.
Yeah.
As the OCR moves. But in terms of the fixed rate, I'm not sure. I mean, the swap rates it gives them that margin to drop.
Yeah.
But I don't know. I'm not very good on this one. My crystal ball is not balling on this one.
Not balling. not crystallizing.
Not crystallizing.
Oh my gosh. I think we're going to see a drop. A small, tiny drop, I'm with you on this. And then February will be the most interesting one to watch because by then we're going to have a new governor in place, the Reserve Bank, and it's going to be interesting to see what approach that woman will have.
Yeah, well, like they're saying inflation has gone up a wee bit, so they still want to curb that. But then I'm thinking it's a bit silly that they count like insurance and rates and that into inflation because those spends... You have to spend that and you have to pay for your insurance and you have to pay for your rates. And those have gone up like hugely. So it's just, I think it's stupid. Wait. Sorry, guys. Like,
I think it's good.
It should be the actual consumer spend, like on the, the shopping and
the
things.
basket. Yeah. I think it's also interesting to see that the increase of first-time buyers, right? Like our main clientele.
English is our second language.
Has been first-time buyers.
Yes.
Because the investors are a little bit edgy because of whatever the Labour is wanting to do when they get into the government, if they get into the government. So a lot of investors are watching this space. And to be honest, I had a rough year as an investor. As a property investor, it's been rough.
Yeah.
The tenants trash your property, they leave, you have to spend 20K to renovate. Then, it takes months to get a new good tenant in. And you have to discount the rent that you were receiving before to what you're receiving now. Yeah. So as a property investor, definitely a bit of a tougher times in different areas of New Zealand. But as a first-time buyer, amazing time to buy.
Such a good time for first-time buyers.
Instead of paying $700 in rent per week, you could be paying that towards your mortgage. So what we've seen is year-on-year, months-on-months increase in our first-time buyers and the property prices. They're still sort of
stable.
They're increasing a little bit in certain pockets of New Zealand, and we'll do another episode around, different pockets of New Zealand, how it looks like. But if you're a first-time buyer and you're looking to buy, like now is the time.
Yeah,
because
absolutely.
You're benefiting from interest rates. Your friends would have bought a house 2 years ago and now they're telling you, don't do it because it's so expensive. But remember, your friends were buying
at
peak and the interest rates were 7%.
Yeah.
You're buying at a best time when the property market is low and the interest rates are low. So Don't delay. The other thing I wanted to mention in our previous episode when we were talking about defaults and, you know, how people are really struggling at the moment is also the increase of KiwiSaver withdrawals under hardship. Apparently, it's been the highest they have ever seen.
Yep.
And that's another thing, right?
That doesn't surprise me.
Yeah, people are dipping into their KiwiSavers to help out with the living cost. So again, if you have a good job, you're working really well, this is the time to be investing into your KiwiSaver.
And then as a business owner for you, going back on KiwiSaver, you hear the announcement of the increase to 12%.
Yeah, good for you guys, not for me. But
how do you, I'm just like, how do small business cope with that?
Exactly. And I was thinking exactly the same. It's actually going to...
That was my first thought.
Yeah. It's going to affect a lot of small businesses that have employees to pay because it comes out from our pocket and our pockets are not that wide that the government thinks.
Yeah.
So I think there should be some sort of counter reform on rebate. We should be getting some sort of rebate from the government to help us pay for those KiwiSavers.
Yeah.
Because to be honest, I do believe in KiwiSaver. I think we do need to make our New Zealanders wealthier by the time they retire, and the KiwiSaver is one of the proven ways to do that because you can't access it, you can't just easily tap into that money. And if it's managed properly, at the moment, you know, I'm dealing with few of our partners that do investment advice and KiwiSaver advice, and we can refer our clients to them. And I can see the difference in the KiwiSaver balances. You know, it can grow 20%, for instance, versus if you just leave it with the bank, with a default provider, don't do anything about it, it will only grow 5%.
Yeah.
So the difference is by the time you retire, could be 300K difference.
Yeah.
And that's massive, right? Especially if you're going to leave up to the age of 90 or 95, it gives you $200 per week
if
extra.
I could still run at 95 and walk, yes.
I'm sure you will. I'm sure you will. But see, this is where all of those things tie in together. So OCR is one thing, the interest rates will drop, but what do you do with that extra spare money is a completely different topic. And do you even have that spare money left after the rates and insurances and the shopping basket?
Exactly.
So a place to watch. Our final thoughts are that the interest rates will drop.
Yep.
Not by much.
No.
And the February one will be the one to watch.
February will determine what to do for the long term.
Awesome. Thank you, guys. Thanks for listening.
Thank
See ya.
you. Bye.
And that's a wrap on That Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.